Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 2nd of July. Starting off with the FTSE 100, which finally has broken out of its rising trend channel, the black one there, which has been in place since the end of December. The nominal level there, I suppose, 8,200. Below that, looking for the floor of that falling trend channel from May, as low as 8,000 now, which isn't great. There is some support there, 81.10, and we were trying to bounce off that level. In fact, 81.09 was the low, so possibly we will find support there. But while we're below the 50-day line, certainly 82.50, this market looks as though it was going to roll over. If you're really cautious, you wait for a break of that, the top of the channel there, the May channel, 82.70, before assuming that we're back on our way upwards. But the key here is not to have an end-of-day close back below 81.10, as that could lead to the floor of the channel from back in May at 8,000. RSI below neutral 50 at 42. We've had the multiple failures in the low 50s, which, as I said yesterday, is normally a very negative sign. Moving on to the DAX, and here it was a market trying to stay within that rising trend channel. We're right on the floor of the channel now, 18,100. Risk is obviously to test June support around 17,900, and can't rule out a test of April support down to 17,600. Early and end of day close through the 50-day line, which we've been trying for days to get through, 18,300, would open up the prospect of a move up to that May resistance line, 18,700. But just had another RSI 50 failure, so that does suggest we are also rolling over in what looks as though it's effectively a head and shoulders formation with the right shoulder, a bull trap through the 50-day line. Moving on to the Dow, and here it's been the best of the bunch in the recent past. We're still above the floor, well above the floor of that rising trend channel. We managed to avoid the need to test the 50-day line in the floor of the channel there at 38,900. While we're above that, still there's a chance of nipping up to 40,000 and record highs. But probably the more likely thing now, given the lay of the land, is that we will have to test the 38,000 area again, basically echoing the bearishness of the FTSE and the DAX. RSI still above neutral 50 at 55, so that does give hope that while there's no end-of-day close back below that 50-day line, we could still head up to 40,000 sometime later this month. Moving on to Bitcoin, where there were signs of recovery yesterday, and here a bit of a consolidation, probably the levels we don't want to see. The old support there around 63,000, and we are really basically bumping against that. RSI still below neutral 50. And that means that there's still a risk of a test of either the 200-day line, 58,000, or even that March support line projection, 56,500. We really need to be back on the right side of that 50-day line, 66,000, to feel relaxed that the testing of the 60,000 area after many tests is finally over. Moving on to gold, and here another market trying to hang on to its bullish run. Here hitting the 50-day line there and that May resistance line around 23.55. We want to see an end-of-day close above that to give us a chance of moving up to 24.50 again later this month. Otherwise, it looks as though probably there'll need to be a test of the 22.80, 90 area. RSI 48, so it's a little bit negative, but basically it's a market going sideways. The stocks are next, and starting off with Capex, which was the star of the show last month, but this month in a consolidation mode. We really need to stay above that 0.18, which has been previously mentioned. I think 0.19 the low today, but 0.18 our line in the sand. We did have a dip down to 0.155, but ideally we stay above the previous 0.18 target, and then that would allow room for a move up to 0.4 plus by the end of this month. If you're cautious, maybe you'd want to see a break of this resistance line there, which has just come into play now through today's high at 0.24. So an end of day close of up to 0.24 would be the trigger for 0.4 if you are watching this stock. On to Clontarf, which came up with the goods and continues to come up with the goods quite nicely at the moment. Here we hit our initial target there at 007 and looking for as high as 0.11 or 0.12 by the end of this month. Nice, what I call a V-shaped bull flag. Looks like a mid-move consolidation, bouncing above all, or bouncing on old resistance at 0.06. And the other sizzle that could come in here is that the 200-day line starting to rise, which means that both the 50 and 200-day lines are rising, and we are heading into a golden cross. The run-up to that is traditionally the strongest part in the cycle. only back below 0.06, really abandoning the chance of a move to as high as 0.12 by the end of this month. On to Contango, which managed to wriggle its way higher yesterday and has followed through today. Surprising hasn't followed through more, but we were already looking for the top of that triangle there from February. 2.6 pence once we had that gap higher back in the middle of last month. We got a V-shaped bull flag, as I call it, or a U-shaped one, and bounced above a rising 50-day line. So this should follow through. An end-of-day close above 1.6 is hopefully the trigger on a move to 2.6, maybe as soon as the end of this month. The other point to note is that this is a bear trap island reversal, one of the strongest patterns around. We gapped down back in March and we've gapped up twice since then. So in fact 3 times if you look closely back in May. So this should be set fair in quite a nice way. And if you want anything else in terms of evidence, we've had a bounce off RSI 50 as well. So almost everything going on there in a positive way at Contango at the moment, fundamentals aside. On to Devolver, which I, one of the few people who look at this chart, looked at recently. We've hit our first target there at the top of that rising trend channel there from back last summer, and looking for a new level to the upside now. The upper parallel of that June trend channel as high as 47 pence, and that could be hit as soon as the end of this month, while we remain above 30 pence, which was the old October resistance and also the floor of the gap we have left today. Moving on to ECR Minerals, where expectations of a dive towards 0.2 pence have proven to be a little bit too bearish. In fact, we've got a bear trap gap reversal, so gapping down below, falling below the May support there at 0.25. Above that, with the gap, we're looking for a break of 0.29, which is the April resistance line, and heading up to as high as 0.38 by the end of this month. But the key here is that we break that resistance line there, otherwise we could just have more consolidation in the current range. But ideally no end of day close back below 0.25 pence. European Metals is next, and here we've broken out of a falling wedge which has been in place since April, and done it quite nicely after a little blip yesterday. Looking for the shares to hit the area of the 200-day moving average and the top of that falling trend channel from April at 22 pence as soon as the end of this month. And a bit of bullish divergence coming in there as well. Lower lows for the end of June, but the RSI actually climbing, so that does suggest a bit of accumulation in the current zone. Moving on to Helium 1, where we're waiting for the shares to break that red resistance line there from back in February. That is currently around the 0.9 pence level, 0.91 to be precise. Interesting that we've got this sort of saucer-shaped turnaround in the recent past, which is quite bullish. Bounced off the top of the gap that we, or the bottom of the gap rather, we had then last month, around 0.67, which is a positive. We've also got bullish divergence as well, an uptrend line in the RSI window. So above 0.91, looking for a 1.35 target by the end of this month as best case scenario. But obviously we need to break that line. If we don't break that line, then the bets are off. On to Gem Diamonds, which came up with a rather large diamond, as you might expect from a diamond company, today. And here you can see that we've got potentially a bear trap reversal with the gap higher that we had at the beginning of May. Current situation looks like a mid-move consolidation ahead of a move up to 16.5 pence by the end of this month. And ideally we stay above the 200-day line at 11.8 pence. In the meantime, we also ricocheted off a rising 50-day line, which makes things look positive. MediaZest is next, and despite having one or two stones thrown in it, the shares have headed up towards the top of that rising trend channel from this time last year, around 0.077. Above that line, we're looking for up to 0.1 pence by the end of this month. We've got the 50 and 200-day lines both rising. Stop loss here probably around the 0.65 level, and we're not expecting that to happen given the way that we've had a bear trap from below the May support there at 0.05. On to the last two. First one is Reabold, where some people are tantalized by the cash the company has. They might also be tantalized by the rising trend channel base, top of the channel there at 0.09 pence, and we've just got a little break out of that, the recent range now at 0.08, and looking for that to be hit over the coming days. Uptrend line in the RSI window as well, also helping the cause, but the key here is to get on the right side of 0.08 and stay there. After that, we can entertain the idea of retesting November resistance over the course of the summer. Finishing off with Westminster Group, which apparently had some financing news today. Here you can see that we've got this rising trend channel, which does actually look pretty strong, especially the way that we've had a sideways consolidation since April, bouncing off the floor of the channel and now breaking above the 50-day moving average at 2.5 pence. Looking for 4.5 pence perhaps by the end of August on that one. That's it from me today. More updates tomorrow.